What is up, fella? Debit Credit Nation once again brings you another SAP tutorial video. So today we are going to learn a very important month end activity, that is period end activity, which is called foreign currency revaluation. So this video will be divided into three segments. First we'll talk about what is foreign currency valuation, that is a concept. Next we'll talk about how do we run foreign currency valuation in the system, and finally we'll get to know what is a backend config for doing the foreign currency valuation. So I'll start with what is the concept of foreign currency valuation. So suppose our organization has foreign currency exposure, that means we import and export goods with foreign countries. So whenever there is an import and export of goods, it may happen that the exporter is invoicing us with their currency. So whenever this happens, that is our company code currency is different from document currency, we have to do foreign currency revaluation. So example, suppose today is 25/7, so 25/07 we purchase some goods from, we are in US, we are located in US, and we purchased some goods from an organization which is located in London. So suppose the invoice is of GBP 100. Okay, now on 25th of July, suppose the exchange rate of USD versus GBP is 1.5. So that means $1.5 equal to 1 GBP. So if I make the payment today, I have to pay 100 into 1.5, that is 150 USD. Okay, but this is a credit purchase, so we agreed into a contract that I am going to make the payment after 3 months. So July, then August, September, October. So 25th of October, which is 10, I'm going to make the payment. So when I make the payment, my outflow will be GBP 100, but we should not be concerned about GBP. We are concerned about the dollar value because our home currency is dollar. So suppose on that particular date the exchange rate becomes 1.7. That means if I pay on 25th of October, I have to pay 170 USD. Okay, versus if I would have paid on that particular date when we purchased the goods, I needed to pay 150 USD. So this way I am paying on a higher side. Whenever there is this foreign currency exposure is involved, we either pay on the higher side or we either lose some money. So here we are paying $20 extra. So this is called foreign currency conversion loss. Okay, similarly, suppose on that particular date the exchange rate is favorable, that is the exchange rate is say 1.4. In that case we would have ended up paying $140. So that means 150 minus 140, so there is a foreign currency profit, foreign currency gain. So this is called foreign currency or foreign exchange revaluation. This foreign exchange loss or gain are of two types. One is called realized gain and the other one is called unrealized gain. So whatever we talked about, it is about realized gain. That is after 3 months when we pay, we either pay 170 or we pay 140. If we pay 170, then we have a realized loss of $20. If we pay 140, then we have realized gain of $10. So this is called realized. Now what is unrealized? As per the IFRS or any local gap of the country, mostly the local gap of the country, if a foreign exchange invoice is unpaid at the end of the period, that means, so today we have an open foreign exchange invoice of 100 GBP, which is equal to currently $150. Now on the month end, that is on 31st July, suppose on 31st July as a part of month end activity we need to execute foreign exchange revaluation. So on that date, suppose on the month end date the exchange rate is 1.55. Okay, so as per this date I need to pay $155. Okay, so there is a foreign exchange loss of $5. This $5 loss we have to book in the system, although it is not actual loss because we haven't paid, the payment date is too far away, but at the end of each period as per the IFRS we have to book if there is any unrealized gain or unrealized loss. So we book that loss or gain, and on the next date, that is 1st of June, 1st of August, we reverse that $5 loss. Okay, so this is how it works in the system, and this is the mandatory reporting requirement in IFRS. So this is all about the concept of foreign currency revaluation. Now we'll go to the system and we'll understand this in SAP. So this is the vendor account balance display in SAP. If I execute, I see I have 3 open items. I have the local currency. I don't have the document currency. Let me quickly bring the document currency from here. So I don't need the text field. First of all, I'll get rid of this and I'll add this document currency. Okay. So I see whatever open items. So I see there are 3 open items, out of which one is GBP. But this one was posted back in May. So I'm not going to use this. Let me post a fresh invoice. So I'm going to post a fresh invoice with GBP on July's date. So to post an invoice, I'll go to FB60. Okay. So let me copy my vendor. This is my vendor. And suppose my invoice date is say 10th of June. Sorry, 10th of July. Okay. So I call it GBP invoice 1. The currency is GBP, and suppose the amount is say 200 GBP, and suppose this is my expense GL, and I need to book a cost center for this. So my cost center is this is my cost center. Okay, document posted. Now if I come back here in the FBL 5N screen and I click on refresh, I'll see another document. So this is the other document. Oh god, let me bring back the previous view. I'll remove text. Should have saved it, but anyways, document currency, enter. So I have one invoice of July, which is of GBP. If I get inside of that document and I go to the header, so I'll see it has taken an exchange rate of 1.50. How does it calculate the exchange rate? Let me go to OB08 slash OOB08. Now position. So what I can do, it is, since it is not working, slash n OB08, I can click on this print button, and there I can do a filtration. So I will put a filter on this. So my exchange rate is M. I'll talk about this when I show you the backend config. My from currency, so my initial posting is in GBP. I need to convert from GBP to USD. Okay. So as per this config, so this is the date. So I posted on 10/07, which is this is the exchange rate that it has picked up. So the exchange rate is valid from 31st/5, which is a recent one. So this exchange rate has been picked up. So the invoice is posted with this kind of exchange rate. Now suppose this invoice remains unpaid. So the invoice is posted on. So if you want to see the amount, what is the amount in USD, just open it and click on this overview button and click on. So this is a GBP currency, which is 200 GBP. Now click on display currency, you will see the USD value. So the converted USD value using 1.40, the converted USD value is $280. Now suppose on the month end the invoice remains unpaid. So as per the IFRS requirement, we need to calculate the unrealized exchange gain or unrealized exchange loss. Now to execute the month end activity, that is foreign currency revaluation, we use the T code FAGL_FCV. So /O FAGL_FCV is the T code. Get inside of it, and I have created one variant. Let me quickly use that variant. So first I will execute with test run, and here I will enter my vendor. So my vendor is this one, Kurt Angle. So I want to execute foreign currency revaluation for only for this vendor. So this is the 32100. I have entered this one here, and I don't want to do foreign currency valuation as of now for GL account, GL balances and all. Just want to do foreign currency revaluation for only sub ledger, which is where they allow customer and vendor. So I have just done a vendor posting. So I am doing foreign currency revaluation for the vendor only. Also go to the GL account balance tab and you can click on reverse posting, because as per the IFRS requirement we need to post the unrealized gain or loss, and we need to reverse that document on the first date of the next month. Okay, so first I'll execute with test run. So I'll click on execute. Now what does this screen say? It says that it found two invoices. So for example, if I go to my FBL 1N screen, I will see two GBP invoices. Okay, one is, so this is the first invoice. If I get inside, GBP 200, and this is the other invoice. Okay, so again GBP 200. So coincidentally my both of the invoices are of GBP 200. Now here, so these are the two GBP invoices. Now when it was posted, it has used this exchange rate. The first invoice that was posted on May month, which was posted with the exchange rate 1.5, and here just now I posted this invoice which has taken an exchange rate of 1.4. Now when we do revaluation, that is on 31st July. So as per this OB08, the 31st July exchange rate is 1.35. So it is different from 1.5 or 1.4. Now there is a foreign currency revaluation, unrealized gain or unrealized loss. So what is the gain and loss? So the difference, these are the exchange rate used in the posting, and these are the exchange rate which is available on the last date. So when I go to the postings here, so it has calculated a $40 foreign currency gain it has calculated. So how do we understand? I'll show you once I post it. So this is just a trial run. I haven't executed it actually. Okay, so I come back. So everything is fine. I come back and I remove test run and I go to update run. So this time it will actually post the foreign currency unrealized gain. Okay, now I'll click on execute. Click on posting. So I see two documents are posted, one with 1007 and the other one is 1008. So this is the FC valuation and this is the reversal document. So one by one, see the date as well. The foreign currency valuation was posted on the last date of this month, and its reversal is posted on the first date of the next month. So just select on the document and click on display document. So you'll see on GBP terms there is no difference, because here if I go to my example, I have bought goods worth 100 GBP and I will pay money of 100 GBP. So with GBP there is no difference, but the difference is in USD terms only. While purchasing, the equivalent USD value was 150, but while paying, equivalent USD value is 170. So the difference you will see always in USD. So with GBP there is 0, but if I click on display currency, I'll see USD. With USD currency there is a $40 gain. How did I understand it's a gain? This GL account is credited. So generally gains are credited, and loss, if it is loss, it will be debited. So this profit and loss GL is credited and our balance sheet GL is debited. I'll show you the backend config later in the third half. And if I go to the header, it says it's a document type is FC, and it doesn't show me any exchange rate because it is just the difference, calculating the difference. And if I come back to the reversal document, select it and click on display document, you will see the reversal document here. Again I'm going to turn on USD. Yes, so here my gain is debited and the balance sheet GL is created, just the reversal of it. Okay, so it has been posted. The unrealized gain, the month end activity has been done. So you come back. So I have shown you the unrealized gain here. In this example it was gain. Now suppose you have executed but you realize that you have executed incorrectly. What you can do, you come back, you have a button called reset valuation. Okay, select this one and click on the reason for reversal, that is erroneously you posted this foreign currency valuation. Select it and you can execute. This way it will reverse the posting, because I have already posted. Now it has reversed my posting. So same posting it has reversed. So whatever posting I did on the last date of this month, that is reversed, and whatever posting I recorded on the first date of the next month, that is also reversed. So select it and click on display document. You can see the reversal document and go to the header. It says document header text says reset revaluation and all. So this is all about foreign currency valuation for unrealized gain, that is on 31st of July, the date is not paid. Now suppose when I make the payment, we will see the realized gain. Suppose I make the payment of say 5th of August. So let me put an exchange rate of 5th of August. Now the problem is this position. Okay, let me do a new entry. So M valid from 5th of August, so I'll make it 1st of August. So uh, so a new exchange rate, suppose it is valid from 2nd of August. Okay, and it is from GBP to USD, and when I make the payment, suppose the exchange rate becomes say 1.7, just assumption using okay, sorry, 1 comma, okay, it takes this way, so save. Okay, now let me quickly check the GBP values in one screen. So I'll put a filter. My exchange type is M, foreign currency, from is GBP and to is USD. Okay, perfect. So when I make the payment, my payment will take this exchange rate. Okay, 1.7. So let me quickly pay this customer. So there are two open invoices. I want to pay only one invoice. That is the invoice that I just posted right now. So come back. So I am going to pay this 280, this invoice. Okay, so let me copy the vendor number, because this vendor I am going to make the payment. T code for making outgoing payment is F-53. So date, we are going to pay this customer on 5th of August, which is this date. Again here I'll select 5th of August. Okay, and I will pay in GBP, because the transaction is always in GBP, because they invoiced us in GBP and they expect that I will pay in GBP only, so that they are secured from any kind of foreign exchange fluctuation, but we will be suffering. Okay, so amount, since I bought goods worth 200 GBP, so I will pay only 200 GBP. So the amount is 200. Let me pick up the say I'll use any cash account. This is the cash account I am going to use to make the payment, and here I will paste my vendor. Now get inside. Why it is showing this way? It is fully distorted. Okay, so I just logged in with a different theme. Let's see, I hope it will work now. Okay, so I'm going to pay this invoice /o F-53, document date 5/8, posting date 5/8, here GBP, bank account, amount 200 GBP, value date I don't require, and account is this one. Okay, enter. Okay, perfect. Now I can see the lower part. So currently all of these accounts are items are activated. Just select all. What is, so this is select all button, and you just need to deactivate items. Okay, and I will pay this one only. So select this and activate. So now 200 versus 200, all fine. Now I will post it. So document has posted. Now since I make the payment, it will now consider the realized gain or realized loss. Let's see what is, go to document and click on display. So posting key is 40, that is debit, that means it's a loss. So when I go to display currency, I will see USD. With USD respect, I am paying 340. That is, when I bought, the invoice was of 280 USD, but when I pay, I had to pay 340. Why? Because during payment my exchange rate is OV08, my exchange rate is higher, that is 1.7. see, it's a better view now, I can see the position as well. So exchange rate is M from currency GBP to currency USD. So when I make the payment, it will consider this exchange rate, that is 1.70. you can see, we can go to the header and we will see document header. So 1.70 has been picked up, that is the date on which I make the payment, which is the 5th of August. The exchange rate becomes 1.7. so it is unfavorable to me, because when I bought it, it was lower, but when I am about to pay, it is higher. That's why we book a foreign exchange realized loss here. So that ends the second part of the video, which is the how to do foreign exchange revaluation in SAP. Now I will show you the backend activity, backend configuration. So for that, go to SPRO, SAP reference IMG, then under financial accounting, this is a S4 system, go to general ledger accounting. Here we have a periodic processing, because it is a part of month end activity. So under periodic processing we have valuate. So click on valuate. Here are the nodes. So first we'll go to define valuation methods. This is our valuation method. So it is open item valuation. I have added document type FC. When we did the foreign currency revaluation for unrealized gain or losses, we posted with document type FC. This is the exchange rate. When I go to OB08, I look for M. M is the exchange rate, and we will always valuate, and we can do balance valuation or item level valuation. So if I check this, that means it's a balance valuation. Okay. Now next config node is just below this one, define valuation area. So here just assign, just create a valuation area and assign your valuation method, and my company code currency is USD. So always whatever currency it has been posted to, I want it to valuate it into USD, convert it into USD. So the currency where you want to convert it will be needed here. So my company code currency is 10, which is USD. I assign here. Then expand this foreign currency valuation and prepare automatic posting for foreign currency valuation. Come here and just double click on this KDF, exchange rate difference open item / GL account. So this is an when I did a foreign currency revaluation, my invoice was open. So that's why for open item, and my chart of account is CANA here. So let me quickly show you. Whenever I post any transaction to this business partner, my reconciliation GL, this is my GL account, that is vendor reconciliation GL is 211000. So here against 211000 you have to assign the GL account. So I double click here, I can see if there is a realized gain or loss, I will post to this GL. So I just posted a realized gain. So this is my realized gain. So the difference, the gain is posted to 700 400. So I assign the GL account here, that is for realized, that is whenever I paid, these GLs are being triggered. And while foreign currency valuation, that is unrealized gain, when I did on 31st July, I posted something, these GLs were picked up. If it's loss or it's gain, this GL will be picked up. For loss it will be debited, for gain it will be credited, and the offsetting GL, I use this balance sheet GL, because I showed you there was one balance sheet adjustment. So this is the GL. Okay, if I want to see that document that I posted, so let me quickly go to FB03 and my company code is this one. Let me go to document list. I don't recall that document number. So company code fiscal year is 2022, but my document type is FC. I know my document type is FC. So click on execute. So this is these are all my foreign currency revaluation. So if so original revaluation, this is a revaluation, this is a reversal of it, then this is a reversal of the original revaluation, because I did reset revaluation. So if I double click 31st July, yes, if I double click, I'll see the GLs. So this is the GL 700 420, which I have maintained here. Okay, and this is 211020, 211020. That's how the GLs are derived. Okay, so that's how we do foreign exchange revaluation in SAP. If you like this video, do subscribe to my channel Debit Credit Nation and share this video with your friends. Thank you so much. We'll see you next time with a new video.